Hello, good morning, everyone. Okay, so welcome to our daily briefing here. So let's start our briefing now. So today is 12th August, so it's Thursday, and we take a recap on our previous important economic data in the first part. So US core inflation rate yearly July. So the previous is 4.5%. The forecast is 4.3%, and the actual is same at 4.3%. So actually, this economic data didn't bring much effect to the US dollar index. Okay. So the next one is US inflation rate yearly July. So the previous is 5.4%. The forecast is 5.3%. The actual is 5.4%. Actually, this one is good for the US dollar, but we can see that if the inflation rate monthly which is slowed down, so the US dollar went down last night. So we take a look on our market graph here. So we can see that here the US dollar index fell down after the release of the CPI, of the US CPI inflation rate. Okay, so and then if this one the US dollar, the fell down of the US dollar, we can see that this one affect all other forex major pairs trading instruments. Okay, so we go back to our PowerPoint, and then the next one is US EIA crude oil stocks change 6 August. So previous is 3.626 million. The forecast is negative 1.271 million, and the actual is negative 0.447 million. Okay, so this one is actually this economic data is didn't good for the WTI crude oil prices, but the WTI crude oil price, it went up last night. So let's see what happened on our market on last night here. So we go to the next part. Okay, so the first one is gold previous day market volatility recap. Okay, so the market volatility at last night is rise 200 pips in the US session last night. Okay, so why? What happened? So we read the factor here. Spot gold closed up 1.32% on Wednesday to 1751.7 US dollars per ounce. So the largest increase in 3 months because the US dollar fell after the data showed that US inflation slowed down. Okay, this is the reason. Okay, alleviating the concerns that the Fed may soon reduce stimulus measures. Okay, so the next one is WTI crude oil. The market volatility is rise. Okay, 250 pips at last night. Okay, around 12 o'clock. Okay, so oil prices rose on Wednesday, and a weaker dollar offset the government report showing that the crude oil inventories fell less than expected. Okay, so US crude oil futures rose more than 1.4% and fell 2.4% earlier because the United States called on the OPEC Plus alliance to resume the production at a faster speed. Okay, so for today, we have to take focus on this important economic data. When come to EU section, we have to take note that focus on these two important economic data. Okay, so the first one is UK GDP 3 months average June. Okay, so the previous is 3.6%, forecast is 4.8%. So the data release time is at 2 o'clock later. Okay, so now it's around 12 o'clock, right? So 2 hours later. So a higher than expected reading should be taken as positive for the GBP. So while a lower than expected reading should be taken as negative for the GBP. Okay, so the next one is UK GDP growth rate yearly Q2. So previous is negative 6.1%. The forecast is 22.1%, which is very high compared to the previous one. Okay, so the forecast. So this one is very important for the GBP USD today. Okay, so we have to focus on this important economic data. Okay, so the daily release time is at 2 o'clock later, same as the previous important same as the UK GDP 3 month average here, 2 o'clock later. So a higher than expected reading should be taken as positive for the GBP, while a lower than expected reading should be taken negative for the GBP. This one very important. We will have to focus it. Okay, so when it comes to US session, there are two important economic data tonight. Okay, so the first one is US initial jobless claims. Okay, 7 August. The previous is 385,000. The forecast is 375,000. So the data release time is at 8:30 tonight. Okay, so a higher than expected reading should be taken as negative for the USD, while a lower than expected reading should be taken as positive for the USD. So you have to remember this one. Lower, then it's good for USD. If higher, then it's bad for USD. So the next one is US PPI yearly July. Okay, previous is 7.3%. The forecast is 7.3%. Same. Okay, the data release time is at 8:30 tonight too. So same 8:30. Okay, so a higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken negative for the USD. So for the important economic data today, so for 2 o'clock and also 8:30. So for 2 o'clock is talk about the Great Britain pound GBP, and the 8:30 is talk about the US dollar. Okay, so any of your client trading any trading instrument regarding the US dollar and also the Great Britain pound, they have to take note on this important economic data today. Okay, so when come to the last part of briefing today is the market update of gold. I will still keep you update on gold. The resistance level of today is 1765. So the support level is 1735. My personal opinion, I will still take it as bearish since last Thursday until now. Still bearish, but yesterday the gold went out. Okay, sorry, it's not good. Okay, so why I will still take it as bearish? So let us read the factors here. So several Fed officials say on Wednesday that the US economy is growing at a strong rate and the labor market is rebounding. Okay, this one is actually a hawkish comment. Okay, this is very good for USD. Okay, so indicating that the time when the Fed starts to reduce economic stimulus measures. Okay, so the July PPI is expected to be similar to the previous value, which is more similar to the July CPI situation. Okay, so indicating that the US inflation data has slowed down in an all-round way and may fall in the future. Okay, so the number of initial jobless claim applicants may continue to decline slightly until it returns to the level before the epidemic. So the strong NFP data performance in July shows that the labor market continues to recover in a great stride, which will also be reflected in the number of initial jobless claims applications. So the downward pressure on growth prices has not yet subsided. Okay, so as the Fed still expects to reduce its bond purchases, and the bulls should not blindly go long and still need to watch carefully. So this is saying that if you want to buy on, predict the gold prices to go up further, then you have to stay and watch carefully first. Okay, so in the day we will focus on the US July PPI and also initial jobless claim data. So we take a look on at the market graph here. So if the price fell below to the support level here 1735 here, then our target will move for further downside to 1726. So in alternative scenario, if the price went up to the 1765, break through the resistance level here, then our target will move for further outside to 1777. Okay, so that's all for our briefing today, and wish you have a good day, and we'll see you again. Bye bye.